Well, good afternoon, everybody. I'm acutely aware that the three of us are the only thing standing between you guys and drinking right now. So as we get nearer the end, we'll...
Still the closing comments, don't forget.
So we'll get started. So thanks again for the invitation to be here. My name's Sully. I work for PricewaterhouseCoopers. I'm with our panelists today, Vinny and Tom, CEO of Gyft and Gogocoin. And I think the idea today is to talk about some of their experiences in both consumer and merchant adoption, what the current critical issues are, what the bumps in the road have been, and hopefully some crystal ball gazing as well from these guys to see how the next 12 months are going to play out. So I think we'll introduce you guys, and first of all, I think what would be good is for those people that don't know Gyft or don't know Gogocoin, it would be great if you guys could talk us through your companies and what you guys do in the market.
Sure. So Gyft started off about 2 years ago as a mobile and digital gift card platform. The thesis behind it was that plastic gift cards that you see in the rack at places like Safeway are going to disappear over time, and people are going to be storing these cards, these prepaid cards on their phone, and kind of what Starbucks is doing right now with scanning mobile phones at the point of payment. We do the same thing. We just take the plastic cards and we generate those codes, those QR codes and barcodes dynamically. So you can upload existing gift cards. We'll convert them, we'll digitize them for you, and we will sell gift cards that are available in the market. Instead of going to a store to buy a gift card, you can just buy it off your phone or online and send it to a friend. That was the founding thesis. That's all we do over 2 years later. But I got into Bitcoin late 2012, early 2013. I bought my first coins at about $40. In fact, I was trying to buy it at 30, and it went up faster than I could actually get hold of the coins. So it changed in a couple of days. But I was into Bitcoins. I didn't see it as as something which we could use at that point in time. I was kind of, it's nice long term. I was concerned about sort of consumer adoption, mainstream adoption. But a few months later, May, after the bubble in 2013 in April, just say, hey, why not just try it out and see if it works and see if the community embraces it, and it's cool, and the coins are still holding well above $100. So we plugged it into our platform, and what we essentially did at the time was open up the ability to pay any one of our 200 merchants using Bitcoins. You can walk into a store, or you can pre-buy your gift cards through us and pay with Bitcoin and get a gift card which you scan and pay. And there's pretty big success amongst obviously people in the Bitcoin world. We're seeing success in things like PayPal as well, where PayPal takes 2 days to get your cash from your PayPal account into your bank account, so you can use Gyft if you want to go pay for it at a store that may not accept PayPal right now.
So what was the kind of light bulb moment for you guys then when you decided that Bitcoin was something you want to offer?
The thing about Bitcoin, which is different from credit cards for us, is obviously no chargebacks, no fraud. We don't have to know who the customer is. Whereas in credit cards, we're asking you for your address, your billing address, your zip code. We're capturing a whole bunch of information on device fingerprinting, which we have to be concerned about. Fraudsters just tend to use lots of credit cards on the same device, and we have to do a lot of the fraud profiling, which we just don't have to do with Bitcoin. And then when we look international, Bitcoin, people pay with Bitcoin, we can accept and deliver a gift card code to anywhere in the world. So if someone, and I'm African, so I'm from South Africa. So if someone from South Africa was making a purchase, or Nigeria, or one of the other high-risk countries out there, right now we would just decline a credit card. I mean, I've been in South Africa on a trip using my South African credit cards, or even my US credit cards, trying to buy from US retailers to deliver to my home before I get back home from my trip to Africa, and they won't accept the credit card because your IP address is in Africa. So, and the reason they won't is just risk of payment. How do they know it's not stolen? How do they know it's not fraud? So e-commerce merchants have built these systems in place around their companies, which basically typically only mean you can operate in a few countries, US being one, maybe Canada and Britain and some other countries. But the notion of Bitcoin for international trade is something which interests me greatly, because I'm not from the US, and I know how difficult it is when you're offshore trying to make purchases and prove, hey, I'm legit, this is real money, and on the other side, the merchant won't accept the credit card.
Sure. So I want to come back to the international element in a bit, but Tom, talk us through your light bulb moment and where you saw that underserved segment of the market that you thought Gogocoin would offer?
Right. So Bitcoin has had this access gap for a while, and basically it's very difficult to buy Bitcoins. And whereas Gyft kind of addresses the offboarding of somebody who has Bitcoins and being able to create value by buying a gift card, we are actually addressing the first problem, which is how do those people get Bitcoins to begin with? Because this is actually a hard problem. With Coinbase, you generally wait about a week after you've transfer the funds. And then on top of that, you have the whole research kind of period of trying to figure out how do you buy Bitcoins to begin with. How I started off with this was I convinced my wife to start accepting Bitcoins at her cupcakery, which is within walking distance. It's Cups and Cakes Bakery. It's her business, and accepting Bitcoins was an easy proposition. The problem was people would come into the store and say, well, how do I buy Bitcoins? And we didn't have a really good solution for them. So what we did was we developed this card. Basically, it's a prepaid access mechanism for being able to buy Bitcoins. It's what I believe is the easiest way to buy Bitcoins, because when you buy this, you're buying with cash. So it's effectively preventing a lot of the fraud problems by saying the retailer has to accept cash. We then charge the retailer for the activation. And the user then can take this home, scratch off this code on the back, and be able to get Bitcoins instantly to their hosted wallet on gogocoin.com. So this is dramatically trying to lower the barrier to purchasing Bitcoins, because it's a really hard thing to do. And I've been very inspired by Gyft, because Gyft really proved that there is a market for spending Bitcoins. And the next thing is really how do you reduce that friction into the market? Yeah. And doing things like accepting Bitcoins is a major thing, because it raises the value. For example, if Netflix starts accepting Bitcoins, price is probably going to go up.
Yeah. Well, we can discuss that.
Okay.
So we've got the access to and the outlook for Bitcoin, which is now kind of where you both sit in terms of a particular part of the business. And Vinny, you had it was published yesterday that you've added Walmart to your stable of clients. I think it'd be interesting just for the audience just to talk us through how that experience was, and I think everybody's interested to know.
Yeah, I mean, we don't discuss any of our relationships with any of our retailers. We have over 200, so everything from obviously Walmart, Target, Gap, Victoria's Secret was added in Christmas time. So we have a lot of retailers. We have look. And this is the Bitcoin community we're talking to right now. Obviously, the Bitcoin side of our business is interesting, and I personally have an interest in Bitcoin, so this is why we do what we do within the Bitcoin community. But the reality is, Gyft is a digital mobile gift card platform. We power, for example, American Greetings has their Just Wink app, which has got millions of users sending greeting cards to friends. And if you hit the add a gift card button, it's all powered by Gyft. So we have this distribution network where we push our gift cards into third parties. So when we talk to retailers, they talk into Gyft, and they look at where we distribute gift cards, who are our partners that are using our APIs, how we're selling gift cards direct to consumers. Bitcoin's one part of our business, so I think it's a very difficult question to answer, because most retailers, I would say that they don't really care about selling Bitcoin and accepting Bitcoin. And the reason is, if you look at the numbers, and we've kind of given some guidance on where we are numbers-wise, the volumes are just not big enough. And you go take it from a retailer's perspective. You look at a big multi-billion-dollar retailer, even if they sold, for example, Overstock's announced that they're doing $1 million a month, and so is Target Direct. If you look at the real margin these guys are making out of these sales, it's incremental, sure, to an extent, but the margins are pretty small for these retailers. Even if they did, $10 million a year, it's just not that much money. And so when you look at the mid-market guys like Overstock, it's probably a lot for them relative to the $100 billion and $50 billion giants out there. To add Bitcoin into the mix right now as another payment method, it's just not exciting for them. I think it's exciting. You guys all think it's exciting to add it. It's just not exciting for them. And it goes back to Tom's point about just accessibility. Not enough people have Bitcoins. I mean, we're pretty well known in the Bitcoin community. We have lots of users using us. We're growing on a daily basis. But those numbers are small. It's just the sad reality is it's small numbers in the bigger retail space. And as much as we all want to grow them, they're only going to grow at a certain pace, and that pace is dictated by some of the regulations. For example, we don't have an exchange in the US right now. It's hard for people to get Bitcoins. And also there's buy and sell pressures on Bitcoin, which creates volatility, which consumers don't want. So it's hard to see how the bigger retailers are going to adopt Bitcoin in the short term. There may be an influx of people who are trying to sort of offload coins because of, IRS gave guidance around taxes, and some people want to just sort of spend those coins and whatnot. But it's hard to see mainstream adoption coming right now, given where, the media doesn't help, right? So Bitcoin crashed 50% or, whatever. And then the article's at the front page of the paper, people get scared. And then you have also the Bitcoin community telling their friends to all buy Bitcoins so they can. I see this stuff on Reddit and Twitter, and people saying, "Hey, buy Bitcoins." This is when it was going up in October, November. Buy Bitcoins now, and next week the price of whatever you buy is going to be 20% less because the Bitcoin is appreciating, and that's just a bad sort of message.
I think you've got a point, and I think the volatility is a huge issue, which is probably preventing a lot of merchant adoption at this stage. But I guess the question is, why would Overstock decide to start accepting Bitcoins then? What's the business case for it if there is still so little activity out there relative to the rest of their business? I'll throw that out to both of you. I think it's an interesting...
Well, let me answer that with WordPress as an example. So WordPress, they make blogs. They allow people to buy blog services. Not everybody has a credit card, so not everybody could buy a blog from them. By accepting Bitcoin, it meant that they could get a larger audience, get more customers, and that's a big deal. So, Overstock is an American company. Most Americans have credit cards. But you look at a company like Bitcoin Store, and they're able to ship products to places that Overstock won't because it's Bitcoin. And, I believe that as more and more people accept Bitcoin, it naturally causes the value to be better. My wife accepting Bitcoins in 2012 was kind of like an experiment for us, but as a result, the media stopped talking about Silk Road as much as cupcakes and electronics and maybe drugs, and so it really meant that the conversation changed a little bit. And I think this is what's happening, is the whole industry is maturing. So Overstock accepting Bitcoins is basically Overstock saying, we think Bitcoins are important and we want to be part of that ecosystem. And I think that what we're really talking about is a revolutionary way to make payments, not, and that's why I don't like to talk about volatility, because I can make a payment instantly. If I take my dollars, exchange them Bitcoins, pay somebody, that's me paying digital cash. And that's a really big deal, because I can buy something potentially cheaper than Amazon on bitcoinstore.com.
Yeah.
Well, and that's why we launched Gyft Points, which gives you 3% back if you're a Bitcoin user. With Gyft, we had customers who were paying with credit cards and PayPal saying, hey, they only get 1% and 2% respectively. How do we get the 3%? What do we have to do? And we explained to them, look, you have to go to a place like Coinbase and put your bank details in and buy Bitcoins, then come back and spend it with us. And you kind of lose them at that point, right? Because then they have to pay 1% fee there. So like PayPal is probably our fastest growing payment method because we give 2%.
Yeah.
So to get the Bitcoins and pay 1% and get in,
So in terms of consumer adoption, what you need is a smoother, a less bumpy process, right? Tom,
the volatility is a problem for consumers. It really is. The volatility for them, for the people in the Bitcoin community, we're holding Bitcoins long term. We all think Bitcoins are going to go to the moon and it's going to be thousands of dollars a coin and tens of thousands of dollars a coin. When? No one really knows, but we all know there's long-term upside. People trying to use Bitcoins in daily transaction, if they can get their hands on it, the volatility is a problem. We have had customer complaints and people come to us and they bought their Bitcoins at this price.
Yeah.
Then they generate an order invoice for a gift card at Y price, which is now kind of more Bitcoins than they originally bought, and that's a problem for them. Now, how do they? And that's in the course of a couple of minutes or hours.
But that's a problem with a low market cap of the entire industry. So that changes as more and more people put money into the system. So the real problems are, if Bitcoin is the highway of money, where are the on-ramps and off-ramps? And I think Gyft is a wonderful off-ramp because it allows people to get something valuable and to be able to spend their Bitcoins in all sorts of new places. I think that it's a matter of friction. It wasn't that long ago that PayPal was something that people were like, oh, I don't know why I sign up for that. And now most people don't remember what information.
We all buy, I think everyone here buys into the long-term vision. Everyone buys into where Bitcoin's going right now. And I just think right now I'm trying to say first-hand experience. It's not as it's not as simple as it sounds. It's not there yet.
So I guess the ultimate question really for me is, Tom, how would you get my mum to start using Bitcoins?
That's a very good
to
question.
buy goods and services,
Yeah.
whether it be, I don't know what, marmalade, jam, goodness knows what. But, that's for me, it's always been the ultimate test, both in terms of an experience and in terms of a value proposition.
Right, and when I started working on Gogocoin, my goal was to make it as easy for my mom to be able to buy Bitcoins. And now she doesn't really completely get it still, I think. She's watched some interviews that I've given and whatnot, but for her, it's what utility does she get out of it. So if I said, hey, you can go spend your money at Overstock and buy, baby toys for my kid or, something like that, that creates a reason for her to be interested. For example, I've talked to some kids about Bitcoin, and they're like, well, what is that, or why do I care? And then I say, but you can buy video games from Humble Bundle. And they go, oh, okay, I get it. We're talking about digital cash, which is revolutionary, and I think that the volatility is again, a problem, but companies like BitPay are really addressing this, so they're making it easier, so that, because my wife, she doesn't care.
On the merchant side.
Yeah, my wife is a merchant.
Right.
So she sells cupcakes for Bitcoins. She uses BitPay. It's easy for her.
Sure.
She can cash out in dollars or keep Bitcoins. It's her choice, but she's not really looking at a volatility problem there.
That's not where the problem is. The volatility is with the consumer's perception of how much money they have with them.
Oh, of course, yeah, and that's...
And everyone agrees that and we use BitPay. BitPay is a great service. But, and this kind of brings me to my next, let me just jump in my next point I was trying to look about earlier on. And I'm not so sure right now widespread adoption of Bitcoin in all the retailers out there is a good idea necessarily. I think it may be, as a community, we want to have it slower, more steadily. Because what happens is, and from our experience as well, gift cards are a low margin business. Okay, it's low margin. It's not anywhere close to what typical businesses are, because obviously we're taking a cut from the retailers. We're getting a discount. We have to sell those Bitcoins back in the market to replenish our inventory. And any retailer doing this, whether it's Overstock or any of the bigger ones, if a big retailer came in right now and started accepting Bitcoins, you're going to have heavy selling pressure in the market on a daily basis based upon how many Bitcoins they're accepting. There's only so much BitPay can take and deliver to wherever they sell, whether it's exchanges or investors, whatever else. So I think what I'm looking for is I want a slower sort of growth in the Bitcoin price. I want a more stable growth. I want to see more long-term investors and funds putting money into Bitcoin, because these guys with sort of long-term buy and hold are going to reduce volatility in the market. And I think that in the short term, bringing in, think about it, it's kind of intuitive. We all think more merchants adopting Bitcoin is good for the ecosystem because there's more places to spend your Bitcoin. We haven't solved some of the structural issues of why people are going to hold and keep Bitcoin with them and spend it at these merchants. So then what you're doing is you're bringing more sellers into the market realistically versus people currently who hold these Bitcoins in their wallets and haven't spent them yet.
But you're talking about a perfect world scenario here where the pace of growth is uniform across all areas. And I think obviously we've seen over the last year or two that that's certainly not the case.
Yep.
But Tom, in your experience, you've got merchant adoption, which for a variety of reasons is starting to ramp up. Mm-hmm. And some of those reasons are, there are a variety of reasons. Let's just say that. Let's talk about the obstacles for consumer adoption more specifically here, because what we have is more opportunities to provide value, to provide outlets for Bitcoin.
Right.
But really at the front end, where there's theoretically less obstacles, we're not seeing that adoption necessarily move into the mainstream.
Right. I think that the Bitcoin presents a real opportunity for emerging markets, and that the American use case is maybe not as attractive to the international use case. The unbanked represent at least 53% of the world. Bitcoin represents the same kind of utility as a checking account and a debit card. It may not have that Visa rails powering it, but if you get the same utility, it's kind of irrelevant to that person who's looking to get value out of their money. So digital cash is, I think people are still grappling around this because it's this new idea. It's not PayPal, it's not credit cards, it's something that you actually own and control in a different way. And the payment power means that you potentially get more for your money. So Yeah, you might speculate a little bit.
Why do you say get more for your money?
Well, Bitcoin Store sells their products for less than Amazon.
So, but I'm saying, does every merchant that adopts Bitcoin do that?
No, my wife doesn't. That's true. But it does represent another payment system for her. When she's looking at it, she uses Square. She accepts cash. But Bitcoin is kind of this sweet spot of being able to have a quick transaction and basically not have to make change.
Yeah. So Vinny, is this not just an issue of trust when it comes to consumer adoption? Trust that it works, trust that there's outlets for it. I mean, how much does trust play versus when you have a variety of other options to use it?
I don't think trust is the question. I think fundamentally, Bitcoin, in my opinion, is not a currency. It's a commodity. It may become a currency one day. It's just not a currency right now, and it fluctuates and whatnot. But consumers culturally, I mean, the real question is, how do you get cultural adoption of Bitcoin within consumers? Are you going to get the whole world tomorrow to agree that Bitcoin is a standard and use it? No. But you're going to find pockets of people who adopt Bitcoin, and you're already seeing that in places like Argentina, in Cyprus. You may see that in Turkey and Ukraine and Crimea and Russia in the months to come. You may see these things happening where pockets of people start adopting and accepting in their communities. So Bitcoin is something where if a community, like for example San Francisco and Silicon Valley, adopts it and it starts being used, it'll spread, and other communities will pop up around the world. And the Bitcoin community as a whole is doing this independently, Satoshi Square in New York, etc. People are building these communities around Bitcoin. It's just not going to happen uniformly and overnight. It's going to happen. No. It's going to break out, and it's going to happen in pockets of. So I think what it is it's a cultural, migration in pockets of people who are interested in using this as a currency.
And I would agree with that, and I think we've seen where there could be use cases for countries adopting it. It's generally moving. It's a traditional mistrust of certain systems that have certainly in the last 12 months have provided that value proposition towards digital currencies. But we're not talking about that. We're talking about how you get my mum to start using Bitcoin in more places. And is the value proposition there right now for more consumer adoption? Either because there's the cultural framework is more accepting, or that there are clearer value propositions when it comes to cost.
So what I've seen is that there's clear demand for Bitcoin. When I was selling Bitcoin over the counter with local Bitcoins, people would come to me. Sometimes would drive an hour and a half to meet me as a stranger with cash. That's a high trust situation. People are scared, that they're going to get mugged or whatever. But I believe that and this is a big part of Gogocoin, is that I believe that retail presents that opportunity to kind of solve that trust issue. And if you can securely store people's funds like any other bank, then that's not an issue. I think PayPal is the comparison point. If you look at Coinbase, it's very, very similar to PayPal. And PayPal, there was a time that people didn't trust PayPal, but it's built up. And maybe not everybody completely trusts PayPal, but it is an institution. And I believe Bitcoin is going to be a larger institution than PayPal. So how does that happen? Really what we're talking about is having that ecosystem around it to make it valuable and easy to use. And that's something that we're trying to address specifically. I think Coinbase has done a great job with that. There are a lot of companies that kind of are smoothing it out. And right now it's difficult, but that doesn't mean that it's going to be in a year from now.
Yeah. So Vinny, I want to come back to something you mentioned earlier, which I think was quite inflammatory, which is, is a large retailer consumer either accepting Bitcoin a good thing right now for the ecosystem?
Look, obviously it's good for Bitcoin to become accepted, more globally, and you want more people to use it. The real questions you have to ask yourself, and again, I'm a big fan of the international use case versus the local use case when it comes to spending Bitcoin. I'm actually a bigger fan of using the blockchain for other things. So, like for example, just trustless type arrangements, smart contracts, etc. Like what the guys at Color Coins are doing. Like those are things I'm more excited about Bitcoin for than the currency side of things, because I do think a lot of what's been happening in Bitcoin sort of currency land, people trying to hold it. People have just made gains in Bitcoin, so they're trying to spend that Bitcoin, right? So you'll find, and people who are buying Bitcoin were buying it because the price was going up. So I want to make sure that we understand that when this thing goes mainstream, these are not going to be the reasons that people use Bitcoin.
Yeah.
So we have to get to what is the core use cases that people use Bitcoin for. So, having said that, I mean, some of the things, I'll ask a question here to the audience, and I never tell people lift up their hands because no one wants to raise their hand. So I'll ask in the reverse order. If you think Bitcoin in 2 years' time won't be over $1,000 a coin, or let's call it $2,000 a coin, raise your hand. Okay, so there's one person. So the broad consensus here is that Bitcoin will be over 2,000, in the next 2 years, and that's something which obviously excites everyone in this room. And but it reminds me of a movie. It's kind of a funny movie actually. War of the World. It was World War Z with Tom Cruise. And I'm not going to give away a spoiler, but in the movie there's there were, so the zombies invade the earth. Okay, no big surprise.
Where are you going with it?
No, and so the guys landed in Israel, and they asked the Israelis, okay, so how did you guys? It was one of the final bastions where the zombies just hadn't gotten into Israel, and so they asked the Israeli guy, like, how did you do this? How did you know? And he gave them some sort of story about what happened. I think it was. I think it was like Yom Kippur War or something, and he gave a story back saying, look. The Israeli sort of intelligence agency sat down and we at this Yom Kippur War, we figured that we weren't going to get attacked, and everyone in the room agreed. There was like 9 of us in the room, and everyone agreed we weren't going to get attacked, but yet the next day we got attacked. And after that, we had a principle. The principle was, if everyone agrees that something is going to happen, the 10th man gets appointed. That 10th man has to assume that won't happen and everyone's wrong, and then think about how would you do things if that didn't happen, right? So take the contrarian type of approach. And that was quite so that sort of mindset, so if you apply that to this room, everyone here is convinced it's going to go over 2,000. I'm convinced, I think it will, but let's assume it doesn't. And the reasons it doesn't go over $1,000, $2,000 a coin is because you get sell pressure and buy pressure sort of meet up, and there's a market price where it is today, maybe slightly higher. What does it mean for Bitcoin if that's not the case? And you aren't going to see this rapid appreciation in value in your pockets as Bitcoin holders. What do you think about the currency as a currency? What do you think about Bitcoin and the blockchain as a platform and protocol? And where is the innovation going to happen? I mean, I'm kind of fearful if Bitcoin goes to $10,000 in the next year, because it creates a whole bunch of problems for the Bitcoin market and industry and the community, for the people trying to build companies on this platform.
So Tom, would such a dramatic price increase, which I think a lot of people seem to think is going to happen, how would that impact on, to your best guess, how would that impact on people's ability and willingness to want to use it as a currency?
So when I talk to people, volatility is one of their primary concerns. That being said, there are a lot of merchant use of Bitcoin, and it seems like the awareness keeps on going up. I heard in Brazil it's like 30% awareness. So I really think of it in a different sense. I think of it as the new payment network. And in the new payment network, you may not think of Bitcoins, or you may think of making payments. And so if you're making a payment over the wire, you may be thinking completely in dollars, and what happens is Bitcoins do get transferred behind the scenes because it's cash, and you don't care about the price because you're making a payment, and you have a merchant processor that's helping you do so, something like that. So for me, I don't think of it as a huge problem. I do agree that there's buying and selling pressure, but that's actually a good thing. So when I first started getting into Bitcoin, I started selling Bitcoins over the table, just $50 at a time, because I didn't have that many at the time. And what I found was customers kept on asking me for more and more. I mean, it went from $100 to $1,000, and it was I was trying to keep up with all this demand. And I think this is something that's continuing to grow. Really what needs to happen for it to get it to a tipping point is that it needs to be dramatically simpler. Coinbase definitely helps that. I think that there's a lot of innovation that can happen beyond that, but really we're talking about the most amazing payment network in the world. And I think the future doesn't necessarily mean that consumers think about Bitcoin, but they're using it. So really what you're talking about is being able to reconcile debt very, very quickly, provably, is a big deal. Being able to use cash online is a big deal.
So let's talk about these tipping points, and I do want to do a little bit of crystal ball gazing as best as possible, and who knows whether we're going to be right or wrong even tomorrow based on what we know. But I think what will be really interesting for the audience is your guys' view on what these tipping points are, both in terms of its ability to get this mainstream adoption by users who feel comfortable and trust it, and then by merchant adopters as well, who feel that it is actually there's a genuine business case to be able to use it. And what are those critical events you think might be?
Well, they're different for different communities, right?
Yeah.
So in different countries in the world, there are going to be different tipping points. That's why I'm saying, like, Bitcoin is going to emerge, in cultural hotspots around the world based upon certain events. So what will it take for it to be in the US? Kind of obvious, guys. Banking, right? A bank or group of banks needs to sort of adopt Bitcoin and allow companies, just for starters, Bitcoin companies to operate within this system. Now, you can also take the view that we're going to operate outside the ecosystem, but that's not going to give consumers the confidence right now. It may take 5 years for consumers to say, you know what, we're done with the existing banking system. But if you ask me what consumers are looking for, they want someone to stand behind this saying, because consumers, they just don't understand the details and the technical specifications.
And they don't want to.
Like, they're never going to read the Satoshi's original document. So they want what they see right now as being the trusted sort of overseers of finance in this world to endorse Bitcoin in some way, shape, or form. Now, obviously, IRS giving guidance is a good thing, et cetera, but that's what it takes in the US. What it takes in other parts of the world is rampant inflation and distrust of governments from a perspective. Now, that could happen in the US. We could have rampant inflation, in which case Bitcoin may become a even more valuable commodity and store of value and become a currency in the way I'm describing. But in other parts of the world, when this has happened, when rampant inflation takes over, Bitcoin becomes the de facto currency, especially where you have countries who are, maybe anti-US dollars or there's laws against the US dollar. Bitcoin becomes something which they can rally behind, and which is great to see.
So you're talking about a kind of a bottom-up kind of grassroots movement.
It has to be.
But in contrast to that, do you not think that that grassroots movement will move towards it if there are traditional structural protection in place, and they want to see although we are talking about developing a new type of trust in something, won't consumer protection be, from governments be a big factor in this?
Look, the existing financial system protects consumers very well. And when you've had all these data breaches with companies and credit card information going missing, has anyone here lost any money from all that? No. I mean, my credit card details were exposed, et cetera. You phone your bank, you get a chargeback if you have to have. I mean, it's amazing how the press doesn't mention that to consumers often enough. They don't tell the consumers if your credit card information is being leaked, et cetera, et cetera. It's all like, oh, your information is all over the place. In reality, you have financial and consumer protections in this country and in other countries in the world within the existing credit card rails. But in other countries where people are not using credit cards, they don't have access to that. That's the opportunity for Bitcoin. In other countries where people want to pay U.S. companies for imports or exports, that's the opportunity for Bitcoin. So Bitcoin is going to have a number of very key use cases in different parts of the world, depending on the structural, infrastructure and deficits. But for it to go mainstream, and when we talk mainstream U.S. and mainstream sort of some of the developed markets, it's going to take a lot now.
Yeah, Tom, what do you think?
So I want to answer that in a slightly different way. I believe that part of so there's going to be a lot of kind of things that happen to create a tipping point. But I think that one of them would be a bank in the United States really accepting Bitcoin or accepting Bitcoin businesses. That would be a big deal. As I understand it, Silicon Valley Bank is still only banking to Coinbase. And this is a problem for Bitcoin businesses, so it's hampering growth. On the merchant side of things, I believe that a company like Alibaba accepting Bitcoin would be a dramatic, will create a dramatic effect to the community, because suddenly you have all these people who are able to accept Bitcoin. They may not accept Bitcoin again, they may decide to get paid in a different currency, but the point is that suddenly you have a lot less friction when it comes to buying and selling goods, basically doing purchasing over the internet, being able to move money, and that's a big deal. So having critical mass in terms of merchants, having critical mass in terms of ways to get into the system, are really, I think, the key factors. And I don't believe this is going to happen overnight, but I think that we're not that far off. The United States is being quite permissive when it comes to Bitcoin, and I think that it may take a few other countries doing so. I kind of speculated that maybe a small nation state would start accepting Bitcoin as their de facto currency, but that's might not happen. But really what it's about is having the amount of people who are already using systems like PayPal to get on board with Bitcoin for it to be mainstream. And I don't think we're that far away.
Sure. Okay. So I do want to open up to questions in a minute. But I guess I'm going to ask that imponderable, which is next 12 months. How do you see merchant adoption? How do you see consumer adoption? What are the factors that are either going to tick it toward, see an uptick or not? Though we are hearing that 2014 will be the year of the merchant.
I mean, I think merchant adoption is going to far outpace consumer adoption.
Yeah.
And that's going to lead to dilutive sort of revenues for merchants. So, the more places you can spend your Bitcoin, if the number of places you can spend your Bitcoin grows sort of asymmetrically to the number of people who have Bitcoins and the Bitcoin market growing, you're going to have a situation where Bitcoin is, it's just not that interesting for merchants. Obviously, you want people to, as a result of there being more options, buy Bitcoin, but then it goes back to the volatility question. So this is a complex.
It's a very fine balance.
Yeah, it's a fine balance. It's complex. There's multiple variables in play here. You asked me in the next 12 months. I think we're still going to have to get through a lot of things around the legalities, etc. And again, banking is an issue. I'm very hopeful that Bitcoin takes off in a big way. I just want it to be a more smoother ride than some of the ups and downs we've had over the past year or two. I just think it's important that consumers feel trust in this in the price. And I mean, Mt. Gox obviously was good for the ecosystem, but that's not what the consumer reads, right?
Yeah.
And so we just need to make sure that we understand what we want. I think the worst thing for Bitcoin is fast value and wealth creation for people who own Bitcoins right now. And I'm one of those people. And I think it's a bad thing if it happens too quickly, because first of all, it's gonna, if it spikes 10x again in a short space of time, it's gonna come down, whether it's 30% or 60%. It's just human nature. This is not what Bitcoin is worth. It's like if anyone makes 10x on an investment, they're gonna take some money out.
Yeah.
Okay, and or 8x or 7x in a short space of time. So it's bad because it creates this volatility. And that's just not good for public perception. I think you get the whole gold rush, and maybe the gold rush gets bigger and there's more people adopting it every single time it goes through a spike and down. But the market capitalization of Bitcoin for me is it's okay where it is right now. Enough people have it, it's being used. Let's focus on building the products and services that consumers are going to want to use, whether it's on the Bitcoin rails or whether it's Bitcoin wallet itself that they can use. Let's build that and make sure we get that right before before the price goes through the roof and crashes.
Yeah, Tom, I mean, the conversation we're having today is a vastly different conversation than we were having 12 months ago. So, in your opinion, how do you, what if we were sitting here in a sofa in 12 months' time? What are the type of conversation? What are the type of issues that we'll be talking about when we deal with, consumer adoption with respect to Bitcoin?
Right. So, from 12 months from now?
Yeah.
I'm not such a good crystal ball reader, but I believe that what we're going to be looking at is a closer situation to where we're at with PayPal, where people are using a system, maybe it's Coinbase or something else, but it's getting to that level of traction, and the questions are more about consumer protection than they are now. So. What I really like to focus on with Bitcoin is the fact that you can get goods cheaper, which is a big driving force for using Bitcoin. And so I don't think that's going to go away, but I think that there is going to be more consumer protection in place to really make it feel safe for everybody. And that's a double-edged sword. I mean, right now when merchants get chargebacks, generally they eat the cost and pass it on to their future customers, which drives up the cost of all goods. And I think this is side effect of having a legacy system. I mean, the banks really haven't innovated all that much in the past few years. I think of being able to scan a check as being the big banking innovation. And I came out of Wells Fargo, so I feel like this is a huge leap forward, and maybe it's a generational thing. Maybe as more kids come on and start using digital wallets in general, that's going to be a big lift. I think that what we're seeing is that digital wallets, be it in Bitcoin form or something else, is rapidly growing. People are getting more and more used to storing their money online with different merchants or different kind of institutions. And so what we're really going to be looking at is kind of the reevaluation of what these businesses are doing to protect the customers. And that might be, dealing with volatility issues. That might be dealing with kind of people saying, "Oh, I didn't get the goods that I expected," and how do they deal with that? But really,
it's about normalizing the experience.
Yeah, and I think that's a big thing with the market cap. As it grows, the volatility goes down. People don't think about that as much. And I think that it's hard to justify it for Americans, because Americans are used to having their very, very stable dollar. And it's closer to the, let's say, gold in terms of how it moves. And so people don't like that in America, but that's a local problem as opposed to the international thing of people not being able to make payments online. If you can't make payments online, if you can't receive money online, then this is a really big deal to you. And so I think it's about, having that natural progression of having more customers get into it, and really the level of understanding keeps on going down. I don't think my mom should read the Satoshi's paper necessarily, but she should be able to use Bitcoin.
Okay, great. So we've got a couple of minutes left. So with that in mind, happy to open up to the floor if anyone has any questions. I think there's a question.
Hi, I'm Marshall Hayner, co-founder of QuickCoin. I was wondering, what do you guys think speaks to, what aspect of Bitcoin speaks to the modern American the most?
Gambling. No, for sure. Like, gambling is it.
Again, you have different segments of the population. The libertarians have a view on it. The Republicans have a view. The Democrats have a view. I think Bitcoin means different things to different people. And it's one of the things that's why it's probably good that we don't know who Satoshi is or anything like that. I think it's the community owns it. So I like to look at Bitcoin for some of the stuff that's in the protocols around smart contracts. I think that's interesting. Less so the currency. That's because I have a credit card, and most people in the room have a credit card. And but I think it means different things to different people. To be honest, from my perspective.
Yeah, I guess that's the beauty of it, right? I mean, but I also think we might be entering a kind of phase where there's a politicization of this. And it's always been there, and there have been strong principles which have started this. But I can definitely see now, as the application is not of if, when, but when and how. It's being used in ways that we haven't seen before, and that we haven't accounted for. Any questions? Yes, no question.
Hi, Joe Colangelo. So, Vinny, I just wanted to let you know, my wife took our taxes to our accountant this morning, and with the IRS's ruling last night, I had the pleasure of going through all of my Gyft.com purchases from last year, calculating the Bitcoin spot price at the time, and estimating my cost basis. So that was really fun.
We'll be improving that experience for you.
All right, I guess that was my question. Do you think that merchants are going to have this onus on them to kind of come up with financial reports for Bitcoin?
That's a great question. It's a great question. So I mean, I'll speak about this more in broad terms, and then as it relates to Gyft in particular. But when you walk into any retailer, so you walk into a Best Buy with $5,000 in cash, they don't know where you got that money from. They don't know whether you pay taxes on it or not, or what, and you buy something, you walk out, that's great. It's your responsibility as a consumer to make sure that is after-tax cash. So when it comes to, so you apply that to Bitcoin, right? Whether you bought Bitcoin at $250 or $1,255, the retailer can never know what your cost base is on any form of tender. So when you're making payments, again, the responsibility is on you. And that's a good thing because retailers, I mean, you can imagine if retailers had to figure that out, it would be impossible. I think what's going to happen more and more in Bitcoin is better sort of just reporting for customers, like what you purchased, what your Bitcoin price was, how much you paid, and it's up to you to go do your taxes yourself. And I think that's some of the things that we'll be doing now that we have guidance from the IRS. We'll just make it easier for our customers to get better reporting of what their purchases were, but there's no way we or any other merchant online can ever know what price you paid for your Bitcoin when you spend it. And so that would be too onerous.
All right, we have one more.
Yeah.
Johnny Dilly, Pantera Capital. This is loud. Since a function of any economy is both spenders and savers, from your two's perspectives on the merchant side, how do you think we encourage a healthy balance of both?
Yeah, so I think that what Vinny is kind of addressing is that he's concerned about too much being sold in the market, but I see that as both a good and bad thing. So it's allowing other people to buy in. Basically, what this means is there needs to be that kind of balance. If there wasn't a market for selling and buying Bitcoin, then it wouldn't be worth anything. It is worth something. The volatility is kind of an issue, but it's going to go down over time with market cap penetration. So.
Yeah, so I mean, I come from a different perspective. We're doing, I mean, obviously we're doing tens of millions of dollars worth of gift card sales. So we see, we can track sales versus the price of a Bitcoin. And I can tell you right now, the problem we have and the problem that exists in the market is when the price goes up, people will sell to lock in gains or whatever it is, they've obviously bought Bitcoins at a lower price, or maybe they have, maybe they haven't. But this price fluctuation is, the selling part of it factors in when the price rises too quickly. So we prefer, as a company, a stable price and people are buying and trading every day. Because conversely, when the price drops 25%, no one wants to buy gift cards because they may have bought in at 600 and now it's 450. They're not going to buy. So we see as a merchant that affects our business. So if you apply that logic as a retailer who's going to accept Bitcoins, you actually want a stable price point. You want a price that grows at a stable pace, and it absolutely can deflate over time and be worth more. But the moment people are using your platform to sort of trade the market, it's a problem, whether they're locking it in for a gift card or some electronics or Bitcoin store. It doesn't matter.
Right, but this is a problem for small countries as well, where they have problems with their currency not having as much value as the dollar does.
Yeah. No, but remember, we're talking about actual consumers here, right?
Yeah.
So if consumers are adjusting their spending patterns based upon the price of a Bitcoin on a certain day, it's, I mean, maybe it's good for them, maybe it's bad for them. I don't know. I need to think about it some more.
Yeah, I'm not saying that doesn't exist. I'm just saying that really this is a growing pain.
Growing pains. Okay, thanks everybody. I appreciate your time, and Vinny and Tom, thanks.
Thank you.